Women have been mocked for their financial choices for as long as I can remember. Think about all of the ink that's spilled on not buying the latte or the avocado toast and pumpkin spice latte, which we all know it's women who are drinking it. You know, there's just this mockery of it every year. And there was an attempt to do that this summer, and women just wouldn't listen and went out and stepped into their spending power. And so it was interesting to see that women sort of threw this off this past year and spent some money and had some fun.
Sallie Krawcheck. She is the founder and CEO of Ellevest, which is an investment platform for and by women. Great to see you again. Thank you so much for taking the time to join me.
Yeah, happy to. Anything for you, Julia, anything for you.
Well, I'm really excited to have you on because I started this podcast in August of 2022, which it was such a long time coming. I do not know if you remember this, but you and I had a conversation over breakfast several years ago where you encouraged me to start a podcast. And it took me a long enough time, but I give a lot of credit to you. And I just wanted to put that out there and say thank you so much for the encouragement.
Thank you. Well, I don't know if I should take credit for it since it took you so long, but I'm certainly glad you did it.
Well, it always stayed with me, and that goes back to that conversation. So anyway, thank you again. I want to start where I always start with my guest, and you know, it's the end of the year, so maybe it's a bit more of a retrospective and a look forward, which is kind of your assessment of the economy and the markets, the big picture.
Well, as you probably know, at Ellevest, we don't do short-term market calls. They make fools out of you because there are so many things that can affect the market in the short term. It really is throwing darts, but throwing darts with a blindfold on after, having been spun around so much that you get, sick and vomit. It's like that, but it doesn't keep people from confidently doing it, mind you, and then not being held accountable. What I would say is that the economy has stayed more robust than was expected. I think the Fed has done a really terrific job of navigating us through what could have been some pretty choppy waters. I have no reason to believe that the historic rates of growth in the market will not hold going forward. It's always in vogue to say that you can't earn as much going forward. The rates of return are forever going to be stunted because of these three really smart things I have to say about it. But the stock market has delivered close to 10%, per annum since the early 1900s. A diversified investment portfolio about 6%. It has been the scalable way to build wealth, in this country, meaning it is accessible to individuals who who invest. And so I think that remains intact because by investing in the markets, you're essentially betting on growth in innovation and the U.S. economy, and that has proven to be a pretty sustainable and resilient bet.
How about this year, the role women played in the economy? I almost feel like it was like the year of the woman. Like,
welcome.
So the Taylor Swift economy, if you will. She even got shout outs in some of the Fed, their reports. Yeah. I think it was the Philly Fed gave her a shout out for the boost to the economy.
For sure. And Beyonce.
Yes, and Beyonce. Barbie. And Barbie. Can't forget Barbie.
It was really interesting, Julia, because women have been mocked for their financial choices for as long as I can remember. And if you need proof of it, think about all of the ink that's spilled on not buying the latte or the avocado toast and pumpkin spice latte, which we all know it's women who are drinking it. There's just this mockery of it every year. And there was an attempt to do that this summer, from some of the broader press. And women just wouldn't listen and went out and stepped into their spending power really joyously. And I think what was most notable, it's been a rough few years for women, financially and economically. I mean, the pandemic disproportionately affected women. The striking down of Roe v. Wade is, among any number of things, a financial and economic negative impact on women. And so it was interesting to see that women sort of threw this off this past year and spent some money and had some fun.
Yeah, I'd say so. So give me an update on Ellevest. I'm a client of Ellevest. I think I probably
Yay.
became a client in 2016 when you launched. Where are you all today? Can you give us an update and maybe fill in folks who aren't aware of
Yeah.
Ellevest, the focus on women? Just am curious because I haven't talked to you in ages about it.
Wow. It's been a while. So Ellevest is really the expert in building women's wealth. We are funded by, built for, investing in, investing through women. With the view, as we love to say at Ellevest, as you might recall, that nothing bad happens when women have more money, and was really founded on the insight that women just don't invest as much as men do. And we just talked about how that has been the wealth creator, the wealth builder. But women have historically kept most of their money in cash, and men have historically invested the majority of their money. And the difference has been, I mean, forget about even the pay gap or any of it. The difference in simply this investing gap has cost women hundreds of thousands, for some women, millions of dollars over the course of their lives. The old industry sort of blamed women for it. How many times have you heard that women are risk averse? And Ellevest was the first that said, well, maybe we're not risk averse. Maybe we're not buying what you're selling. And maybe it's, you built an industry where 98% of mutual fund dollars are managed by men. Maybe you built a business by men for men. So Ellevest today helps women invest from that first investing dollar with a digital offering through to, as they needed, financial planning, and up to, as they needed, private wealth management. So really across the spectrum of a woman's money lifetime, we really work to be there for her and meet her where she is. We're about 1.9 billion of assets under management now.
Wow.
Yeah. Oh, Julia,
wow, that's awesome, Sallie. Congratulations. I didn't realize that. That's awesome.
It's, there are many that are much, much bigger than us, but it's not nothing. And the growth rate, even during, this past couple of years, some of which have been quite tough, have sustained a double-digit % growth rate. So look, when we launched, Julia, you'll remember what women don't need their own thing. And this is, it's going to be pink it and shrink it. And is it, we serve women too. I mean, all the grumbles, even women friends of mine, other people have tried and failed. There was a lot of skepticism, but, as women have stepped into their power, we're there to help them to work to build their wealth.
Yeah. Okay, that's an interesting point too. And, for folks who don't know, you were at one point one of the most powerful women on Wall Street. Mm-hmm. You ran Smith Barney. You were the CFO of Citi. You ran Merrill Lynch Wealth Management. And I am curious, you said some of your own friends were a little skeptical. Yeah. Were you skeptical? And did that viewpoint change for you?
It's a great question. Yes, in fact, as I left running Merrill and was thinking about the next stage of my life, I had any number of folks. We should start an investing firm for women. And Julia, my reaction was likewise. That's junior varsity. It's just junior varsity. What we're going to be girls together drinking Chardonnay and talking about stocks. Like, please, I was in the varsity, which just goes to show my internalized sexism, along with anyone, because we all grew up in this society where for women has been inferior, where we have been trained that it is more expensive, but lower quality. And we all remember, the Bic pen for women, and how much more it cost. And it wasn't nearly as good as that for men. And so I had that same reaction for a while until I, sort of had a lightning strike moment where I realized, and the first realization was, the retirement savings crisis is actually a woman's crisis. If we don't have as much money as men do and we live longer, it's on us. We're going to have to try to golden girls it, in order to survive, during retirement. And so many more women spend their retirement in poverty than men is. And Julia, as I then began to think through what are the solutions to this, at the time, Lean In was in full force. And so I thought, well, okay, they've got the gender pay gap. They got that. What else is there? And really landing upon, the investing gap, and given my background. And then all of it sort of cascaded, where recognizing how much this was hurting women, looking around and saying, who's going to solve this? noting there had been any number of women's initiatives at the big banks that had all failed. And then saying, if I don't do it, I don't know who's going to do it. I don't know if I can succeed. I don't know if that, because the odds are against you when you start a company. But if I don't try, given that I have had the experiences that you outlined, shame on me, to be as privileged as I've been and to have had the experiences I've had, and then to see this market dislocation and not do something about it, and gone to the beach, that would not have sat right.
Yeah. Sallie, you mentioned the retirement crisis, and this is a topic that has come up on this show, but also that it's a women's crisis in particular. Can you just shed some light for folks to help them understand big picture of the retirement crisis that sounds like men and women face, but women to a higher extent?
Well, I'd say we as a society face, right? We don't talk about it much, probably because it's not staring us exactly in the face at this moment. And we as a society are very good at putting things off until the last possible second. But you read the articles about Social Security going bankrupt, right? You read the articles about how little we as a society have saved individually through a 401k, or a pension for retirement. Now layer on top of that relative to men, women have less wealth. Women have 30 cents of wealth for every dollar a white man has. For Black women, that's a penny. And it's actually been going backwards, Julia. We tend to think everything must go in the direction of fairness and rightness and light, but they don't. Millennial Black women have less wealth than their mothers did at the same time of their lives, not adjusted for inflation, less wealth. And part of that is student loan debt, of course, which is a burden that was not as carried as much by the generation prior to the millennials. So you put all this together, you say, we don't have enough. Women have less wealth. Oh no, let's add that women live 6 to 8 years longer than men. Let's add that half of marriages end in divorce. And all of a sudden you're looking at women who, that when that money comes back to them, because for 90% of women, they manage their money on their own at some point in their lives. 80% of women die single. When that money comes to them, 74% have a negative surprise. I know I threw out a lot of numbers, but they're all bad. I could keep throwing out numbers, but what they tell you is we as a society have a saving shortfall, and that it particularly affects women, if only because we live longer than men.
Yeah, we do. Okay, another point that was really interesting listening to you earlier, 1.9 billion in AUM since 2016. And when I heard you, I think you said you were having weekly positive inflows into Ellevest. So it makes me wonder, Sallie, women remained invested? Did they dollar cost average into this market environment? How about the performance? Because, there are probably a lot of folks who may have missed out on the last year and whatnot. Just curious if you could shed some light there.
Nothing you can do about the past. And you, I think, know as well or better than anyone, if you try to trade in and out of markets, it just gives you lots of opportunities to make mistakes. And what is it, Julia? 0.1% of active money managers outperform the market consistently over 5 years. It can be done, but it's not very often done by people for whom it is a hobby, because you're of course competing against everybody at Goldman Sachs and everybody at Morgan Stanley and everybody at UBS whose full-time job it is. And so to think, gosh, I'm not feeling so good about the market right now. Let me take my money out and get back is a 100% a fool's game. So what we saw at Ellevest, first of all, is that 2/3 of our clients have got recurring deposits. It's how we like to invest, if that makes sense for a client. And that by its nature means you're dollar cost averaging because it's X% out of every paycheck. And sometimes you're buying the market high and sometimes you're buying the market low. But on average, you're getting that, you're getting in without having to make a decision. So one, the women continued to invest, and two, they didn't panic. And there's research out there that we're actually seeing in real time play itself out that shows that women are better investors than men when they invest. And it is in part because they don't trade as much. And it is in part part and parcel of that is they don't panic in tough markets.
Sure.
And if you back up all the way, they actually don't check their accounts as much. Because you and I both know, you check your account in a tough market, you're likely, you have to be a very strong person to see your account is down, what would last year, 20 something percent across the market. It's hard not to do something.
Mm-hmm. Yeah, you always hear those anecdotes of like the people who don't check their accounts and they're the ones that outperform everyone else. It's incredible.
Oh, I remember years ago, there was a study from Fidelity of lost, sort of accounts where they'd lost, the account holder. And so nothing was being done. And I think it was the best group at Fidelity, with all those active managers they have there, their full-time portfolio managers, for sure. For sure.
Totally believe it. Well,
because the markets are efficient.
That is true.
That's just it.
Yeah. I have another question for you just about like things that happened this year. And the reason I want to bring it up is you were an analyst. I don't know I feel like maybe you covered banks when you were an analyst. Did you? Okay. Because I think Citi and the whole Sandy Weil conversation going to Smith Barney and whatnot. Okay. And obviously had some high level positions on Wall Street. And so you know this space. What are your thoughts on the regional banking crisis that we saw this year? Yeah. And I know you're not making like big macro calls or anything or specific sectors, but do you have any sort of viewpoints on the banks or the financials, regionals, and maybe risk there? Or are we past it?
Look, for all the banks that would say, "Whoo, we want interest rates to be higher. We want interest rates to be higher." It's good when they're high. It's tough when they're going higher. Because that's a bear market in bonds, and bear markets are not good. And particularly, if a bank is gunning for near-term earnings in order to please the stock market and get the stock price up, and don't position themselves by giving up earnings today for earnings tomorrow. And position themselves for interest rate hikes, it's a disaster. And add that, and that's just human nature, right? Having been inside banks, boy, there's a lot you can do to meet consensus this quarter and earn another penny or a couple pennies. There's a lot you can do in the short term. It's the long term that gets to be the problem when you're sort of squeezing the lemon and all the juice out of the lemon to meet consensus estimates right now, as opposed to thinking long term. And by the way, it's easy to sit here and talk about, you got to manage for the long term. Believe me, when you're inside these publicly traded companies, it can be harder, to do that just because you've got the stockholders who are looking for always more earnings today.
Yeah.
You sort of add to that interest rates went up at historically rapid clip. So something that nobody in these banks had lived through before. And then at Silicon Valley Bank, you add the fact they didn't have a head of risk for a whole year. That first I'm like, we should go a little easy on them because blah, blah, blah. And I'm like, what? I'm sorry. It's easy to second guess from the outside. And then I'm like, you didn't have a head of risk? I'm sorry. That's bad. That's bad. So I think there was, just natural human nature playing itself out. And look, one thing I would say too is, these leadership teams are compensated in equity, and equity is a risk encouraging instrument, right? Mm-hmm. Because, your upside with equity is limited. Your downside, your upside, is infinite. Your downside is limited to zero. And if, the government is going to step in, that further limits it. And so banks are essentially bundles of risk. They're interest rate risk, they're equity risk, they're basis risk, they can be currency risk, they're operational risk, there's AML risk, there's all kinds of risk in these banks. And then the equity encourages risk as well.
Yeah.
Because you're reaching, you're getting paid and you want the stock to go up. And so you reach for, there's a tendency to take on more risk in order to get those returns.
Yeah, it's like show me the incentive, I'll show you the outcome. Would there be a better way to structure that incentive structure?
I wrote in the Harvard Business Review after the subprime crisis that I thought we should pay bank executives in debt, in bonds, not completely, but according to the capitalization of their company. That if they have a whole bunch of equity, pay them in equity. Everybody's aligned. If, on the other hand, they're highly levered and have a whole bunch of debt, which is many banks, then pay them in debt, and they're aligned. And what's the thing about debt? You don't get more than 100 cents back on the dollar, right? And so you are encouraged to be risk averse. You're not encouraged to take on more risk. And so to me, it seemed like sort of a no-brainer to to align the capital structures with the compensation structures of the company.
What was the feedback to that piece from like your peer set on Wall Street?
Oh no, they didn't love that.
You are, as they said on the cover of Fortune magazine, the last honest analyst.
Yeah, there you go. Yeah. There you go. But that was the analyst in me, right? Here's a problem. How do we solve it with compensation? But no, it went exactly nowhere, Julia.
Mm-hmm. One of the things I loved about your book, Own It, and the one thing that stayed with me the most was the relationship with your father, and the way you wrote about the story when you had glasses when you were a little kid and he encouraged you, or even just that relationship, and you attributed a lot of your success to the relationship with your father. And the reason I bring that up is, what role can men play in this conversation? Or we can broaden it out. You can take it wherever you'd like, and you can even talk about your relationship with your father and the impact there. But it doesn't seem like it should just be women. Men should play a role as well, I imagine.
Well, they should. So first of all, the relationship with the father has been shown to be, for professional women in their advancement in business, the most important relationship in their lives. And I suspect it's because, as with my father and me, if you get that support and encouragement from the most important man in your life during your formative years, then if you go to Wall Street and the guys are trying to kick you out, you've sort of got a, stable platform. But you're like, no, y'all are creeps. The most important man has let me know that I am worthy, and I don't have imposter syndrome. I have more of a growth mindset. So I think it is important. So for every man who is the father of a daughter or the uncle of a girl or the family friend, giving her that encouragement, you can do it. You can figure it out. You have the ability, is enormously important. And I just feel for girls who don't have that relationship in their lives and who have to, sort of find other ways to have the strength. And of course, in, the march for equality, men should play a part. I will say that if we wait for him, if we've been waiting for him, we've been waiting a long time. And if we continue to wait for him, I'm not quite sure what else it's going to take, because there are so many studies on the power of diversity in driving, superior business results. I mean, if it's a Tuesday, there's another study that says, oh, more women on the board, that helps. And, oh, more women in senior leadership, that helps. And, oh, more of XYZ underrepresented group, all good, right? But that has driven some, but it has not driven us to equality. And, Gloria Steinem has said no group has given up power willingly. And so I think we need to look to ourselves for how do we continue this march forward? And I firmly believe it's by us playing the game as a team sport. That it's, if it's every individual woman for herself, we know how far that gets us. That's what we've been socialized to do for so many years. If we buy from each other and promote each other and, give each other different RFPs and put each other on our boards, I think that's the way forward.
Mm-hmm. You mentioned something really interesting that I just picked up on, and that was not having this imposter syndrome, but instead embracing a growth mindset. And I bring it up because it's something I struggle with, imposter syndrome. I struggle. How do you get past that? Or do you have any tips you can share with folks who...
The reason I have not succumbed to it is because I think I worked at Salomon Brothers in the late 80s and, on Wall Street in the 90s, where they flat out told you, we are the best of the best of the best, cream of the crop. I mean, it's very Top Gun, right? And so I was at the table with my generation of, at the time, young men who would all were on track to and gone on to run these companies. And they were, I mean, Julia, they might have been smarter than me, but they weren't that much smarter than me. And anything, I had confidence in my ability to learn and grow and to work hard. And so I thought, you might be, inherently smarter than me. But by the way, they weren't. But fine, give them that. But I can outwork you. And so having done that, the growth mindset of, for any of us who've been to school and gotten A's or B pluses, B's, whatever, you can learn. And so recognizing, even if I shouldn't be here today, I can learn and grow so that I deserve to be here tomorrow.
I like that mindset so much. Well, Sallie, I have to say, it has been an absolute pleasure having you on the show, and you really were an influence to me. And so I just wanted to say thank you again and give you the next few minutes to let folks know where they can, find you on social media or learn more about Ellevest and the work that you are doing there. And any parting thoughts, anything that we didn't bring up in this conversation, please take the next few minutes to do so.
Julie, I'm shocked we made it the whole way through without talking about Carolina basketball. I don't know how that happened. Oh my gosh.
I have some of my Tar Heel stuff on my bookshelf, and yeah.
Oh, well, hold on. I mean, I have.
Wait. Let me get mine. I got to get mine because this was a podcast viewer sent me a present. Hold up.
Wait. Hold on.
I don't know. They sent me this can, a viewer.
There you go.
What is it? 1982 NCAA champions.
Love it.
The roster.
Love it.
Yeah.
This over my shoulder, there's a little sunbeam that's getting in the way. But right here, that's me and Michael Jordan.
Oh, okay. You win.
That's my daughter and myself and Roy Williams and Wanda.
Cool.
And that's a ram over there. You can't see the ram.
I love it. Well, for folks, Sallie and I both went to UNC. We both studied journalism. I have my journalism degree on the wall. Yeah.
I was there a little bit before you, but we had a good time. So anyway, besides my passion for the University of North Carolina sports, I would add my other passion is Ellevest. And thank you for asking, Julia. You can find us at ellevest.com. You can also follow us on Instagram or follow me and or Ellevest on LinkedIn. We hope that you will find it to be a learning, sort of a fruitful experience, because we do, I think, have the largest content library of articles, worksheets, et cetera, about women and money. And would love to have you all join us as well as investors and clients of Ellevest.
I love it. Well, thank you again, Sallie Krawcheck, and happy holidays, and great to see you as always.
Good to see you. Thank you.